Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
Good morning, traders. Welcome to the opening swing for April 17th. It's Wednesday. For those of you that are tuning in looking for a trader bite replacement, we're just starting off here, but our goal is to be a little earlier, a little shorter, and a little bit more focused on immediate market action and a little less on teaching. We're just covering the S&P 500 now, but as we kind of work out production issues, we'll probably add more products, likely the NQ and CL. But anyway, let's begin first with our news today. We have no 8:30 news drivers. Really nothing big today at all is on the calendar. There's always unexpected news that could come through, so have your news wires on. But really nothing material for the S&Ps. We have the petroleum report for anybody that trades the energy complex. That's at 10:30. Beige book as well at 2, but no tier 1 numbers. There was a bit of a drop in U.S. equities overnight. The S&Ps tested yesterday's low. I didn't see anything major that came out at that time. There was some CPI inflation figures out of Europe, but which may have had something to do with it, but nothing major. So let's look at our daily chart. The big thing on the daily chart of the S&P 500 futures, the big thing that we have to notice here is we have went from a market condition of price discovery higher and making new all-time highs to a rounded top, and now price discovery lower is our market condition. We're one-time framing on the daily chart, meaning we've made 3 or more consecutive lower highs. And so that gives special attention to yesterday's high today. So that's our daily. What we can see here reasonably clearly is something I'm actually going to bring up on the TPO chart, but that's how we had balance and impulse lower. And now we have unauctioned or poorly auctioned areas above, and we have poorly auctioned areas below. This is a gap zone from February. This is our poorly auctioned areas from our drop. And we have reached balance as of yesterday in the middle here, which makes sense. Let's look at that on the TPO. So this shows everything that I was mentioning pretty clearly. Impulse lower, here are our single prints, and then here is our gap zone below, and look at the textbook balance right there, just absolutely textbook. So now with that, let's take a quick look at the 15-minute chart. And I don't really like time-based charts to trade, but they can help a lot. They can be very helpful for planning because you can see a lot more. So we'll mark this area, which is right around our settlement, which is very key. So here, looking at our 15-minute chart, we'll just take a look at what we have. This area, from the rust area up to this blue. If you remember yesterday, I noted that in plans, this area was really important right around the prior month's low. As we hit this area, the lifting on the offers really picked up. And there's a lot of size on the offers. It was being lifted. Price could not lift, however. So this became an area, a key fight, which we then dropped through and settled beneath. And this area has shut off buying since then. I was focused on the rust colored area. Now I kind of added this other band here as an area that I really think is a decision zone. And if we're able to get above this area, that would be key for moving higher. Likewise, below here, anything below yesterday's low is getting into the gap zone. So let's talk about some structure here on our 8 box and some potential ideas for how the trade, what we could see today in today's trade in the S&Ps. And on a day like today, and really in general, I'll lean more towards talking about important tests than the path the price may take, because the path can be a lot more variable, in my opinion, than the tests and what you look at on your price map. So right here, I'm just going to mark the key areas for buyers and sellers to hold, and we'll talk about in no particular order, we'll talk about what a bullish scenario, what a few scenarios will look like, starting with a bullish scenario. I think for a bullish scenario, and notice what we had here. We tested down overnight to the drop in Europe, tested down overnight. We had a quick look below yesterday's low, and then we rallied, sort of crossed back through the balanced area again, just sort of flushed higher through it, and then grinded into the resistance. So it's like, you can imagine there's a big OTF bid here. There's a big OTF offer here. We push lower, grind into the bid, reject higher, just fly through the balanced areas, and now we just grind into the offer. So balance, grind into the bid, grind into the offer. Will one of them break? Well, the default expectation for me in a situation like this, when we test the edges, by default, I'm expecting the edges to hold. However, what actually happens, you have to take into account the context at that moment, the context, price action, and order flow at that moment. But by default, you'd expect it to revert. But if we get a bullish scenario today, so we're trying to make a test, or a pre-market test, any type of, and which we might get, if we get a bullish scenario today, I would expect some type of a reversion lower on the open. That's what I would expect. It doesn't have to happen, but if we do, I would not expect this reversion to go beneath settlement or to hold beneath settlement much. I could see it pushing lower, testing maybe a bit below, but we'd have to see it pretty quickly get back out and get up into this rust-colored area, back up above Century, and show the ability to get above this area. That's what's important. Testing into it doesn't mean anything to me. Showing they can get back up above and hold these prices, that's key. This area, the 26s, the 30s, first key area. That's the first key area above. Anything below that is a test rejection. But if we can get to the 30s, that's the first test. Second test for bullish strength would be these 40s, middle of the unauctioned area, and a small bit of structure. So that would be the next landmark continuing. And then if we're still able to hold that area, then we'll look to get into the mid-century, the next key. And above mid-century, obviously the 67s would be the key upside target. Noting that just getting to the 30s, the prior month's high, that's one vola up. Traversing this whole area is two vola up. So be aware that that's quite a bit of range. But this is what I'm thinking. If we would break this today, it would be that. I'm not necessarily saying we're going to break it today. For a bearish idea, we could easily have, the bearish idea could happen with a test through this area. I would not be shocked. A test through this area that gets rejected back below into here, or it could happen with initial bearishness. Everybody likes the test because it shows traders that the market doesn't want to trade up here. When traders see a test rejection, they're like, okay, we're good to go short. So traders love that. However, sort of the way a lot of this price action has happened is we see a test that looks kind of scary to trade, and then it goes, maybe you get a setup there, maybe you don't. And then these retests, it's just, with something like this, it's just, what I've been seeing is offers reloading, which is harder for traders. It's harder for us. We like to trade with aggression. When it's just offers reloading, it's more difficult. But if we get a situation like that, if we get the test, that's one thing. Instead, if we get like the offers reloading situation, it could just sort of look more like this, down into here, maybe one attempt higher, and then just sort of getting lower, and then taking out that overnight low and yesterday's low. Now again, if we get into this area with sort of a situation like this, the key thing, the key would be if we test and reject and hold back and start to hold back into this area, then obviously we're just looking at reversion and all of this doesn't mean anything. However, if we break below, get to here, retest, can't continue it, can't get back into range, then we might see some extension lower. Obviously, this is the next key area for me, 60 to 65-ish. Through here, we have a zone at mid-century, which might be key. We could see some activity. Then this area. If we still, and this is one vola down, if we get to the mid-century, that's one vola down. If the context still supports further downside and we still are making lower highs, or if there's a key area of structure that we just can't get through with extension lower, I would be looking at the 42 to 50 as the next area to target, and then the big area, the big downside area would be this magnet zone, which is just above the 30s. That would be the key target for any extension. So these ideas, like I said, therefore, what happens if we get any kind of extension. However, we don't have to get that at all today if context does not support. And if we do get extension today, be aware if you're an S&P trader, most of the good S&P trades that happen with a break of balance like this, they haven't happened at times that we expect them to. Now, sure, we could today get one of these scenarios on the open and get a clean open drive that just trends all day. That could happen. How it's happened more recently, though, is these balanced areas sort of really take their time to ripen and make all the tests within this area that they need to make, and then they make a break. We've seen those breaks happen in the afternoon. So if today is a very quiet day and we just reiterate balance, don't fall asleep because the break may happen later or it may not happen. You have to just kind of be attentive to what the action is. We'll get rid of this and look for any kind of a balanced area, balanced trade, to be honest, would look like a test, rejection, fall down, and then any kind of a test rejection here. If we get something like this, and either we break, we've already tested yesterday's low. So if then on the open we get a test of yesterday's high and then reversion, that means we've tested the low, we've tested the high, we're back to square one. I still would overall, by default, without a doubt, I'm giving odds. If we get further, if we get real extension, I'm giving better odds to the downside based on our recent trend. However, that could very easily change. But anyway, if we get the test above yesterday's high and then rejection back in, then at that point I'm going to be a lot more conservative in the S&Ps because then we've gotten the test lower, the test higher, we're back in the middle, and I'm going to be very conservative. I'm going to wait to see something show me that we're actually going to make a break today. Or if not, if we're just trading within here, usually what I'll do is I'll look for some type of order flow scalps if that's what you do. They've been available in the ES. Be nice if we can have some of those with a stat to back, something like the prior settle, IB stat, overnight stat, something of that nature. But if that's not what you do, I'd be very careful if we're just breaking and reverting, or open your toolbox for what outside in trades you have. That's going to be the biggest key to the trade for everyone today in the S&Ps is, are we using the outside in techniques or are we using the price discovery techniques on a break? And that'll be the important thing to figure out early. We've already went a little bit long today. Kind of keeping these at the right time is something that I really have to work on, but we'll get there. Like I said, thanks to everybody that tuned in, and obviously just tipping my hat to a guy that's a mentor, friend, and inspiration, Futures Trader 71. This is not the trader bite. It's going to be something different, but because I've learned from FT, this will be born of the trader bite. So I hope that as we kind of develop here, we're going to stay fluid and try to match the needs of other active traders. So thanks everybody for your time today. I wish you the best of luck trading, and I encourage you to find some way to improve today, to improve upon whatever you were yesterday. Find your way to improve and be kind to your fellow man, and that's a good day. So thanks everyone. Bye-bye.